So when you come out of a bankruptcy, can you get a car loan or a mortgage loan? How long does it take? Watch our next video and find out. So this is a major concern for a lot of folks when they're thinking about filing for bankruptcy is, how long is it going to take when they come out of the bankruptcy to be able to get a car loan or a mortgage loan? They're going to have to wait 10 years to do that. I have so many people that they hear the 10 years about it's on your credit and they think that it's going to take that long before they could ever get credit again. And that's just simply not true at all. Especially for our Chapter 7 clients. When you come out of a Chapter 7, the easiest thing for you to get coming out of a Chapter 7 is a car loan. Because you're coming out of a 7, you've cleared most all of your debt. So your debt to income ratio is amazing. So I always tell folks, if say you're in a Chapter 7 and your car is it's a clunker, or you just, it's too expensive, you don't think it was worth it, the interest rate wasn't great. One of the things you can do in the 7 is you can choose to not reaffirm the debt, and you can just let it go. It will go with the wash of the rest of your debts in your 7. And then when you come out of your bankruptcy, you can go the next day and get a car loan. And I will tell you, for us, we're here in Georgia, the Northern District, the typical interest rates I see for my clients coming out of a bankruptcy to get a 7, or in a Chapter 7 to get a car loan, you're usually looking at an interest rate anywhere between 8% and about 13%. So I tell my clients, hey, make sure that you shop around, because if someone's trying to gouge you on an interest rate when you come out of bankruptcy, go somewhere else, because there's plenty of great rates for folks coming out of the bankruptcy. And you're going to have a lot of people marketing to you even while you're in the bankruptcy to get you a new car loan. So in terms of getting a vehicle right out of bankruptcy, that's one of the easiest things to do. Now, in terms of mortgages, this really, it just depends a lot on what state you're in. But in terms of mortgage loans, my rule of thumb I tell clients is you need to tell yourself 24 months before you're looking at getting a mortgage loan from a good lender. Now, I have my friends that are mortgage brokers, and they tell me that, there's companies, and if someone has a down payment, they can get them into a mortgage loan 6 months after bankruptcy. And that may certainly be true. So, again, it depends on where you live, what kind of loan you're willing to take out. But the good rule of thumb I tell my clients is to think about is give yourself 24 months before you're looking at a lender lending money for a home loan. But of course, there are always other programs out there. So I'm not saying that that's the verse on it, but just remember that it just depends on what state you're in and what lender you're working with. I think most of the big lenders, they want to see you out of bankruptcy at least 24 months. And one good thing to do is if you're thinking about bankruptcy, just go to their websites and take a look and see what their policy is about bankruptcy. They have them on there. They'll tell you, how many months they want to see you out before they'll approve a loan. But the good news is filing for bankruptcy is not the end of the world. Credit-wise, believe it or not, for most folks, 24 months coming out of a bankruptcy, they're doing great again. And their credit scores are good and life goes on. So, don't think that just because, a bankruptcy is going to be on your credit, like in a 7, it'll be on your credit for 10 years. That does not mean it's going to take you 10 years to reestablish credit. Quite the opposite. It's a pretty quick process. If you have any questions about bankruptcy, we're always happy to try to answer them. Our information is below, and you can always feel free to send me an email, and I'll be happy to assist.